December 3rd, 2025. Markets are choppy. The volatility index is flirting with 16. The 10-year Treasury yield is kissing 4%. Here's what actually mattered today: no spin, no emojis, just facts. CrowdStrike reported after the bell yesterday, and the numbers were legitimately elite. Record $265 million of net new annual recurring revenue, up 73% year over year. Total annual recurring revenue crossed $4.92 billion. Generally accepted accounting principles profitable, $296 million free cash flow. Raised full-year guidance again. Stock is up another 7% today, now exactly 140% above the July 2024 outage lows. The street worried that incident would cause permanent customer loss. Instead, customers using 6 or more products, 7 or more, and 8 or more products all hit all-time highs. Translation: the platform became even stickier. That is rare. If you have been waiting for a pullback, good luck. Momentum traders are now fully long and the available shares are tight. On the opposite end, MicroStrategy. Bitcoin is down 33% from the November high, and MicroStrategy shares are down roughly 52% from their peak. Today, they filed a disclosure that basically says, if Bitcoin stays here or goes lower, we could record up to $5.5 billion of impairment this year, and we might have to sell coins if our net asset value ratio falls below certain levels. That is the first time in 5 years Michael Saylor has publicly admitted forced selling is even possible. The market did not like it. Shares closed down another 9%. At current levels, the stock is trading roughly 1.1 times the spot value of their Bitcoin holdings. That is the lowest premium since 2021. High risk, high conviction only. Microsoft down 2 to 3% intraday on a report claiming Azure artificial intelligence sales teams had quotas cut. My take: this is classic headline noise. When you are bundling Copilot into every enterprise agreement and GitHub revenue is growing 40% plus, the quota math changes. Lower individual quotas can mean higher achievement rates and happier salespeople, not weaker demand. Azure growth is still tracking 33 to 34% constant currency next quarter, according to guidance. I am not selling Microsoft because of one anonymous sourcing article that the company will not even comment on. Bigger picture: the Trump transition team confirmed they want a fleet average above 40 miles per gallon by 2030 to 2031 and are willing to rewrite the old rules. Short term, Detroit hates it. Long term, it does not matter. China installed more solar capacity in the first 9 months of 2025 than the entire world installed in 2022. They're on pace for 1,200 gigawatts of solar and wind by 2027. That is energy abundance. Cheap electricity equals a structural advantage in anything power-intensive: artificial intelligence training, aluminum smelting, battery chemicals, everything. Trade idea flying under the radar: own Chinese commodity refiners and short their American counterparts. The global cost curve is shifting east fast. Wrap up: own quality platforms that are still taking share. CrowdStrike is one. Fade the leveraged religion trades when the collateral turns volatile. MicroStrategy is the poster child. Ignore single-source rumor hits on the mega-cap leaders. Start positioning for the global power imbalance that is about to widen dramatically. That is the tape. See you tomorrow.